Good morning, everybody. I'm Ed Parcaut, usually here with Mike Kelly, but Mike Kelly's in Vegas playing, and I'm here still working. Someone's got to bring you what's going on every morning. He'll be back next week, but for now, we'll just get right into it. Go over a few things that are going on in the market right now. All right. So today we only had a couple things of news, and I'll get into the Fed speak in a minute. But initial jobless claims came in, which initial jobless claims are those that measure individual filing for unemployment benefits for the first time. It was reported at 210,000 for last week. That actually is a decrease of 2,000 from the previous week's revised figure of 212,000, and that was fewer than expectation of 215,000. So again, that's a negative for the actual bond market today. We are currently sitting at about where are we at? All right, as it's coming in. We're down about 2 basis points. The 10-year is 4.28, started at 4.27. It's not doing so bad, but I saw it rally earlier. Some other news came out because everybody was looking at what the Fed said yesterday, which I'll get to in a second. Continuing claims, which increased to 1.807 million claims from the previous week's revised figure of 1.803 million. So people staying on is taking longer to get off. That's what we're seeing. And again, you got to look at a lot of times people are talking about the unemployment rate and where we are with that. The problem with the unemployment rate is it's only counting people who are actively looking for work. Homeless people are not actively looking for work. Migrants, 7.2 million of them aren't actively looking for work. The amount of people who stopped saying, I'm not going to get into this work environment, who just aren't going to work, but they're not looking for work, it doesn't count. It's a skewed number. Mark Twain said there's lies, damn lies, and then statistics. And that's our problem. You can't go off of these numbers. You have to go off of talking to people and seeing what's going on. The government is hiding stuff from you because they want it to look better than it really is. Because, like I said, you can control certain things and whatever your outlook you want by getting the right statistics to support that. Existing home sales came in, which it tracks existing home sales. That is the houses that were already lived in. They're not new homes. And it increased by 9.5% in February at a 4.38 million analyzed pace, which was above the 3.94 million they estimated. And we talked about this earlier in the week that we saw an increase in existing home sales week over week than we saw before, and more than we saw 2 years ago, and more than we saw last year at this time. Supply is up 10% from a year ago. That's what I just said. Median existing home prices was 384,500. Median means it is just what is being sold below it and above it. So if we're selling more lower price homes because people don't want that huge payment, a payment on 575,000 is going to be 4,500 a month. Price, 450 is 42. I'm sorry, five. I think it's 525 is like 4,200. That's a big payment for a lot of people to take right now. So I understand where we're at, but we still don't have enough homes and we need to build more homes. All right. So with that being said, I have one more update I want to talk about. It's all right. So we have all right. So Powell talked yesterday, and he's more dovish than he was hawkish before. They want to keep the range at 5.25 to 5.5 as we expected them to do. But the biggest thing that we were looking at is the fact that they said there's potential for a actual cut in rates this year, which they keep saying this. I just don't know if it's going to happen. I don't feel it's going to happen myself. I think something else is going to come out, because if it doesn't happen in the next quarter, it's going to be too close to election to do it. And so it might happen after the election, depending on what goes on. And the problem is I was at Rotary this morning. We had a financial panel. And if you listen to these people, they're in the financial industry, and it is worse than we know it is. And that's scary out there. The amount of debt that's there that we have right now, and it takes a third of the money that they, print to cover the cost of that. That's just really scary. And where do we go from here? I don't know, but it's scary out there. I talked about existing. So let me see. All right. So GDP, they're looking, it's at 2.1% versus 1.4. Unemployment's at 4% versus 1.1. Here's the thing I talked about a few seconds ago. Unemployment rate, we can't go off of. The jobs they create are jobs that are part-time jobs. All the full-time jobs are going away. If you look at the unemployment rate and all those numbers that come out, we'll have more next week. You're going to see that those are not full-time jobs, they're part-time jobs. Plus, it only count unemployment rate, like I said a little bit ago, only counts people actively looking for work. Actively looking for work. And I said the migrants of 7.2 million, they're not looking for work. Homeless people aren't looking for work. The generation that quit, that's not going to go back, those 3.5 million of them aren't looking for work. So truly, if everybody was out looking for work, we'd have an unemployment rate about 8 to 9%. And then we'd be going, wow, there's something wrong out there. There is something wrong out there. However, what you can do about it is still get out there and get that home that you want, because that's the most important thing. I talked about yesterday, I think mortgage applications came out last week. Um, they were down by 1.6% overall. Application to purchase a home were down 1.2% for the week and down 14% year over year. That's amazing that it's down 14% year over year, because a year ago, there wasn't a lot going on either. Bottom line, with the lack of people looking for homes, I mean, there's still in our area, there's, 2 to 3 people, 4 people looking at a home. Only one of them can buy it. We still have a pent up demand because we haven't built. And that's one of the things we're going to have to address going forward, which for some reason they still don't know how to deal with that. But I'm making off my soapbox for today. I did the commission. We talked about that earlier in the week, and last week I said there's a white paper you should go look at. Here's take a picture of that real quick. Go check out the white paper, read it. Then you'll kind of understand what's going on. Uh, Nobody really knows. Stop listening to the stuff on TikTok, Twitter, all the places. Nobody really knows how this is going to work out. It's going to take a few years for this to get resolved. So don't worry about it right now. Just focus on getting your clients in the home and just focus on doing a loan for them. Um, One of the scariest things about today with the financial planner and the financial panel at Rotary, was the fact that they're saying a lot of people are retiring with 400,000, and it's not enough money to retire, but they have a house. So those are the people who are coming to myself and one of the other people in the Rotary for reverse mortgages. You really want to look at every aspect you have. You want to get that money there in your accounts as long as possible, because you don't know how long you're going to live. Most people think they're not going to live forever, but they're going to live a lot longer than you think, and your money's going to run out. So don't sell your house. Get a reverse mortgage. If you have a question about that, reach out to me, or if you have anybody, I can talk to them. Doesn't mean they have to go through me. I'll explain it to them a lot better. All right, that's all I have for today. We have some more coming out tomorrow, and if you have any questions, reach out to me. If you're on Mike's thing, like it so he knows that you still like him, even though he's not here. And make it a great day, and we'll be back tomorrow. All right, thanks. Bye.